Joachim Samuelsson, CEO of Crunchfish. Good to see you this morning.
Yes, thank you, Alf. Good to see you again.
Thanks very much for joining this conversation. You had a press release this morning where you, for the first time, specified your business model for digital cash. But before we go into that, could you explain a little bit what is the difference between digital cash and other digital payments?
Yeah, the main difference is that all other payment services in the world are inherently an online payment service. We complement that with what we call here our digital cash wallet. You know, we have digital wallets, online services, all of them, but we believe they need a digital cash wallet inside, which enables this capability of doing an offline payment as a first step, and then as a subsequent step, you do all the online business that you need in order to move money between the accounts. So we have that complement to any card, but also any digital wallet of today.
Mm-hmm. And also, going back to where I started with, you had a quite significant press release this morning, and for the first time specifying how you're going to make money out of digital cash. Can you explain a little bit?
Sure. We've been back and forth. I'm the first one to admit that I was wrong. I had always the belief that we should charge the merchants. We should charge the merchants because that's what everybody else is doing, trying to take money out of the merchants, maybe a monthly fee, maybe a transaction fee. But what we now settle on is a business model where we are sort of providing a business model which is very similar to how the issuing of cards work. This is sort of a business from the issuing bank or maybe a wallet that they provide for a payment service, which is inherently, if you think of it, offline, because you have a card. It doesn't talk to anything except when you are blipping it against a card terminal. But it's an offline sort of type of inherently offline thing. We are also very much offline, and we are also that you're able to pay offline. That's what I think is really cool with our solution. But we are essentially like that sort of payment service that is offered by a smart card. We do that, but we can complement cards and we can complement sort of digital wallets. But we believe that's probably where we should be. If we look at all our patents, all our partners, it's all centered around the actual payment side. And I think for us now to tie our business model to that makes just a whole lot of sense. I was the one that I think was the one that for the longest thought that we should charge the merchants. But I'm sort of going away from that. And we have a B2B model charging the issuer really of this digital cash wallet, and then what they do if they pass on the fee to the consumer, or if they absorb it in order to get the benefit for their service, it's up to them. But I think we have arrived at what our business model should be.
And you suggest that there is a fixed subscription fee per digital wallet. How many of these digital wallets is it reasonable to expect there to be around in, say, a few years' time?
Well, just look at the market today. I think there are 30 billion cards. It's huge. And then when it comes to offline wallets, digital wallets, it's also in the billions. There are, just in India, there are so many different payment services, and every single one could potentially have a digital cash wallet from us as well. But then there is also other form factors like smartwatches, wherever you want to have the ability to have a digital cash wallet attached to the service that you provide today. That sort of market, but it's certainly in billions. I think we're going to see a migration as well, just like cash is, it's on its way out in the world. Physical cash is. I think these plastic cards as well. They will also migrate more and more into digital wallets, I think we are very much part of that whole revolution or that whole migration that is sort of happening right now in the digital payments world.
Mm-hmm. And what is a reasonable expectation about the level of fee that you can charge per wallet?
It's sort of hard. I think it's fantastic for us that the size of the market is so great, but people are today, I wouldn't say perhaps happily, but people are today tend to pay maybe $25 per year to have the ability to pay with a credit card. So I think sort of it is around that sort of levels that we would be, I think, looking at that the end consumer, if we will go that way. But we as I said, we are not sort of charging the end consumer in any way. We are a B2B service, but as we have patents in this area, and we will most likely be able to control this sort of new facility. We will set those prices as a B2B service. But my sort of thinking is that we are looking at prices which is sort of similar to smart cards.
I see. And what is the technical setup that secures that you will get paid in accordance with a number of digital wallets that are issued?
Yeah, that's interesting. What we have here is, as we have announced before, we're going to establish ourselves as the global certificate authority for digital cash wallets. And being a certificate authority, it means that every single digital cash wallet needs to have a signed certificate from us. Otherwise, it can't be used. So we will be in absolute full control of our entire business model. That any sort of user cert that they have in their sort of digital wallets or even in a card, that it needs to be certified by us. Otherwise, it won't work. That's the model we are going to market with. That's also a reason really for tying our business model to the payment apps or to this digital cash wallet. It's simply because we have full control through our global certificate authority service.
And you also suggest that by controlling these certificates, you can also add-on services related to, for instance, interoperability. How is that supposed to work?
Yeah, it's all tied to that. I really like that our business model is tied to the functionality that we bring on. I think the base model is just the digital cash wallet that will work within a certain sort of payment service. But what's unique about it is that we can interconnect different payment services. So we can make them cross-service, but also cross-scheme. I think we played with that. We set up our own crunch coin simply to show in a way that even in the crypto currency like crunch coin can connect and pay to other sort of payment services. So cross-service, cross-scheme would be something we provide. But that comes with also a signed certificate on the payment service level. Our base model will have signed certificates on the user level, but now we have to be able to certify the payment service itself, so in between payment services they can trust each other. If we then go to cross-border as well, that is an additional sort of step. And this is all to do that we will have an FX table, a foreign exchange table within the app, and it will allow the issuing app to control all the foreign exchanges that will be when that digital wallet is used sort of abroad. So I think this will be extremely valuable for the payment service, that they will have control over the foreign exchange. And for us, if we add that, we provide for that as well. We believe for cross-border, we will be able to have yet an additional sort of add-on fee for that.
In a lot of the media reporting that I see, there's a discussion of the future in cash, and very often when people discuss the future of cash, they point to cryptocurrency. I know that you disagree, that you don't think crypto is the future of cash. Can you explain why?
Yes, I think it is a mistake, I think, to see digital cash as to implement it as crypto. I don't think it's needed at all. I think we will show now when we're going to work with Swish here, that you can do digital cash just on a normal sort of account-based rails. You don't need any sort of complications. I think one thing you definitely don't need is to do it in a blockchain type of oriented way. I don't know if you saw the news the other day. They talked about worldwide in Bitcoin, they manage 7 transactions a second. 7 worldwide. You can just imagine for any sort of country introducing a blockchain structure for CBDC. It simply doesn't have the throughput that is sort of needed. But what's more, you don't actually need it. You don't have to digitize money as a token. That's a mistake. What you should do is to digitize the money transfer. Both has a value. Money has a value. Money transfer has a value as well. But a transfer comes with a payer and an attached also receiver of the payment. And that's what we do. We are a transactional-based token, which completely then ties to the entire online world with no changes for central banks, for commercial banks. They don't have to complicate things to introduce CBDC. They just have to use normal rails. I think this will go up for the world central banks and the commercial banks pretty soon, because this is music for them. Central banks will be able to introduce digital cash or CBDC much faster, and the commercial banks do not have to make any investments because it can just run on normal rails, really.
Going back to your solution for digital cash, how will the rollout be implemented?
This is where our partners comes in, because I think, again, we really want to reach all the wallets that we've said all the time. It's just that I was wrong in that I thought we were going to charge actually the merchants of the that the wallet providers have. But that's not the way we will actually structure and scale our business model. It will rather be on the sort of individual side or the payer side. But to reach all these wallets, I still have the goal. We're going to reach every single wallet in the world, which is kind of ambitious. But to do that, we need the partners. We've already got Visa, as you know. That's sort of the biggest payment network in the world. Very happy about that. But we're working fast, and we have more partners coming in, which have seen the benefit of what we bring. And the beauty with this business model is that we don't disturb theirs. If you are a processor, switching money, you are typically paid per transaction. We don't add anything to that. If you are a payment service provider, you charge the merchants. We don't add any fees to that at all. If you have a banking platform, you might charge for a license of using that, or however you charge, but we don't add to that. We are just something very similar to how they are today in the industry working with smart cards. And I think that's an accepted model, and they will see it. But to roll it out, we need partners. And that's why I'm less focused on individual revenue right now. I'm focused on to get the big highways into the world so we can reach all the wallets, because that's the end game for me. And now I think we've also introduced a business model that people could start. Look at you, Alf. You are our one who's going to provide some analysis of this, and now we have something to relate to, because I think it's all about scale, and it's all about just counting how many digital wallets we can be. It's kind of quite a simple model, and I think that's going to be interesting to follow. And believe me, I just want to go as fast as we can. But I am focused on trying to get to the highways into the wallets, and that is through our partners.
So a lot to look forward to. Thanks very much for doing this dialogue, Joachim. I look forward to hearing more in the future.
Thanks, Alf, for taking up the opportunity of allowing me to comment on our business model that we brought to market today. Thanks.
Thank you. Bye-bye.